Lordstown Motors dropped 30% during the last hour trading on Tuesday, on news that management does not believe their cash levels are sufficient to continue developing their first vehicle, the Lordstown Endurance. In this video, I will explain the news and whether I think this is a long-term concern for the company or if this is an overreaction in the stock price. On June 4th, this past Friday, Lordstown Motors submitted a Form 8K. This is a form filed with the SEC showing a significant corporate event. In this report, Lordstown Motors says that they have been notified by the NASDAQ Stock Exchange that they have missed the deadline to submit the Q1 2021 quarterly report, and they have 60 days from this notice to submit the quarterly filing and remain in good standing with the NASDAQ. The quarterly filing was submitted with the SEC on Tuesday, but the market did not respond well to the news inside of it. The big concern in this earnings report is their liquidity and ability to keep developing their vehicle while they're still pre-revenue. Management is warning shareholders that they are expecting to need to raise cash soon. Management notes that Lordstown Motors has $587 million in cash on their balance sheet, but they just spent $125 million in this past quarter developing their electric pickup truck, the Endurance. Management does not believe that the $587 million is enough to hold them off until they begin receiving revenue, so they're going to need to either take on debt or issue new shares. Lordstown actually has a very good balance sheet. They have just over $1 million in debt compared to $587 million in cash, and explain later that this $1 million of debt is a payroll protection program loan with a 1% annual interest rate that can be forgiven if used for a qualified purpose. So they have very good flexibility to raise debt if they choose. Considering Lordstown is in a very capital-intensive industry, I don't think shareholders would have a problem with the company taking on debt to avoid dilution. The stock is dropping because investors fear that Lordstown Motors will need to issue new shares. The company has a total value of $1.5 billion after this drop. Management has said that $500 million isn't enough for them to last until the Endurance is released, and if they need to raise more cash, that remaining $1 billion of company value will go by very quickly. The company also needs to be wary of how much debt they raise. With a company value of $1.5 billion, too much debt could quickly ruin their balance sheet. Lordstown Motors is expecting to begin production on the Endurance in September of 2021 and fully ramp up production throughout 2022. Lordstown is a young EV company and they're trying to move fast, competing against some other companies who took their time in the private markets. Lordstown went public 2 years after being founded. The consequences are that Lordstown is going through the same problems their competitors went through, but they're in the light of being a public company. It's important to understand the risks of investing in EV companies. Tesla almost ran out of money many times. There are serious bankruptcy risks involved in an EV startup. I think that there's too much uncertainty to trade Lordstown as a short-term position. It feels very much like a private equity startup. There are a lot of other EV stocks closer to profitability that I'd rather own. Thanks for watching. Let me know in the comment section what's your plan for Lordstown Motors or other EVs. And be sure to leave a like and subscribe. I hope you have a great day.